Daily mortgage rates live with the mortgage calculator. We'll wait just a few minutes here to get started. Wait for everybody to have a chance to jump on here. Let us go live on all the different platforms. We are streaming this live on YouTube, Facebook, Instagram, and LinkedIn. So give us a second here. Hope everyone had a great weekend. Looking forward to the holiday tomorrow. Going to be interesting to see what the rates are like today, popping up in between the weekend and the holiday. In the meantime, while we wait to get started, feel free to drop a comment there. We got the chat pulled up on the screen, so drop a comment there in the chat as you tune in. Good morning to everybody tuning in nice and early. See some people were already commenting as well. We'll get started here in just a moment. Happy 4th of July to everyone. And remember, since tomorrow is the 4th of July, our loan officer training that we typically do on Tuesdays at 7 p.m. Eastern, we're actually doing tonight at 7 p.m. Eastern time. So little note there for the holiday schedule. All right. Okay, looks like we are live on all the different platforms, so we can go ahead and get started. We'll go ahead and take the chat off the screen here. So welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non QM loans. And what we do on this show every day is go through the rates for different conventional loans and non QM loans, the actual live mortgage rates out there in the market. And then we do a deep dive into a different topic every day. Today's topic is going to be 40-year fixed DSCR loans. So our favorite loan here, our flagship product at the Mortgage Calculator, is the DSCR loan, debt service coverage ratio. That is an investment property loan that requires no income, no employment verification, no job verification. And so that is our favorite loan here. Now, today we're going to be breaking down 40-year quotes. So I think Nick is going to do a 30-year quote like we typically do every day. And then Jose, our sales manager with 27 years of experience as a loan officer and a realtor, is going to pull up some actual quotes for the 40-year fixed DSCR programs that we have. So before we do that, let's do what we do every morning though, Nick. Let's go ahead and pull up our pricing tool and go into the rates for today and see what the market is looking like this morning.
All right, let me switch up my screen and we will check it out. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and terms for today. It is July 3rd, just after 11 a.m. Eastern. So today is kind of a weird day. Some programs do not have new rates, some will. So it might be a little strange today, but we'll pick it back up on Wednesday with everybody back in the office. So this will show us our general rates and APRs, including all the fees for our programs. If you'd like a full loan estimate with a breakdown of all the fees that go into the APR, please get with one of our licensed loan officers. We have over 300 in 24 states for primary and second homes. And we can offer our DSCR loan, which is going to be our deep dive topic later, in 44 states. For our demo today, though, we'll set up a nice, easy scenario to compare across programs. We'll set the loan amount to $400,000. We will set the LTV to 80% loan, 20% down payment. We will set the desired price to $99. That means we're going to ask the computer to find the best rate at one discount point in cost. That's our typical request these days with the rates a little higher. And we're going to compare our programs. We'll start with conforming conventional, then we'll check out the FHA rates, and then we'll go into our expanded guidelines, also known as non QM, where we have over 5,000 additional loan programs using alternative income. We don't do the VA or USDA live. VA is only for our eligible veterans and active service members. If you are, let us know. We'd be happy to quote it, but not everybody is, so we don't do that live. And same with USDA, that's only for properties in an eligible area. So if you do happen to be shopping in one of those rural areas, let us know. We'd be happy to quote it, but not everybody is. So we'll start with conforming conventional. We'll do a purchase, 30-year fixed, pretty standard loan, primary occupancy, single family home, 1 unit, state of Florida, the county of Miami-Dade. And for all of our demos today, we'll use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with these basic settings, let's see if we have some updated rates this morning. So it's about the same as it was last week. And again, not all these are going to be all the way live today. All these programs may still have Friday's rates. But the best option we see here, actually, I would probably go with this, the 6.99 rate for 1 discount point in costs and a final APR of 7.157. So remember, we will compare APR so we can compare apples to apples across the programs. So this is a great option for conventional, and it's about the same as it was last week. But if our customer doesn't qualify for conventional for any reason, typically the next option that we can compare, set up the same scenario here, is an FHA product. So FHA does allow a little more leniency on credit events as well as debt to income ratio. However, we'll keep everything exactly the same so we can compare apples to apples across the program. So let's see what the FHA programs are this morning. So looks like some good options here. Again, it's about the same as it was last week. 6.125% rate for 1 discount point in costs, and that's a final APR of 6.717. So still a little bit better than the conventional there. For our customers that might qualify for both, there has been some changes to the upfront and yearly mortgage insurance required for FHA. So for our customers that qualify for both here, it actually might be a touch cheaper. And for our customers that need to use FHA, it's a great change that's been happening. So definitely check those out if you are shopping. Now, where we really love to shine here at the Mortgage Calculator is if our customer doesn't qualify for conventional or FHA at all. Many other banks or lenders don't have other options, but that's where we love to present our expanded guidelines, also known as Non QM, where we can use alternative income. So for this last example, we will keep everything else the same. However, we have a new option now with Non QM for income verification. So full doc is what we use for FHA and conventional loans. That's 2 years of tax returns. So we would typically select this option in order to use one of the alternative methods. So we have asset-related programs, business bank statement programs, our investor programs we'll talk about in a minute for investment properties. Personal bank statement 12-month is our most popular. That's what we always do our demo with. We also have RSU, stated income, VOE, 1099, P&L, and the no income at all programs. Now for our demo today, we will use personal bank statement 12-month. For our self-employed borrowers, this really makes a big difference. Many times our self-employed borrowers with 2 years of tax returns have various write-offs and either don't qualify at all or just don't qualify for as much income as they'd like. So in this case, instead of using tax returns, we're simply going to use their last 12 bank statements, no tax returns involved, to determine a debt to income ratio, in this example of 40%, using their actual cash in the bank statements rather than their tax returns. So most self-employed borrowers will qualify for double, triple, or more income and therefore qualify for the home they want. So these are amazing solutions when our borrowers might need a little bit of extra help or a little bit of flexibility. So let's check out the bank statement options this morning. So the top option here, 7.375 rate for 0.875 discount points and costs and final APR of 7.437. So just a little bit higher here than conventional, but again, a ton of flexibility, and our customer that would not qualify at all or would not be able to qualify for as much home or home loan amount as they want now qualifies. So amazing options here to use bank statements. Also, if you scroll down, there are some other higher rate options that may allow things like credit events like foreclosures and bankruptcies. So not only can we use alternative income, but some of these special programs at a little bit higher rates may allow things like credit events that would be a disqualifier for any conventional or government programs. So some amazing options here. Again, not all our programs are live today, so we will see the full action on Wednesday when everybody's open. Now, before we pass it off to Jose for our 40-year examples for investors, we're going to do as we do every day, and we're going to do some investment property examples for our investors, whether you own a bunch of rental properties and are a seasoned investor or first-time investor. There are some great options. So let's pull up the examples here. We will use the same exact scenario, 80% loan to value, 20% down payment. Everything else will stay the same as our other examples. And we're going to compare our conforming conventional investment property rates to our non-QM investment property rates. Remember, all the government programs are not for investment properties, so we'll just simply compare the two options we have. So here, everything else stays the same. The only thing we've changed from our prior demo is to investment property. So let's see what the conventional options are today. So here's a good option for our investors that do qualify. 7.375 rate for 3.875 discount points and costs. That's a final APR of 7.637. So most of our investors that qualify, this is a good option, but the GSEs that operate these conventional programs have added loan level price adjustments for investments. So that's why we don't have a one discount point option. Most of our investors would rather have a higher rate than 3.875 discount points and costs. And in this example, that's $15,000 that our investor can deploy elsewhere. So with these options, we are pretty limited on the conventional programs. There are no one discount point options. So that's where we love to present our non-QM options. So for the final demo here, for the live pricing, we'll set up the same exact scenario for an investment property. And this time we will choose expanded guidelines, aka non-QM. And we have a couple new options pop up here. First, we need to select our income. And our most popular investor option is the DSCR, as Kyle mentioned earlier. Stands for debt service coverage ratio. That's because it doesn't actually require any income or employment from our borrower. We simply use the estimated rental income from the property we're purchasing in this case to offset the PITIA, the proposed mortgage expenses of the property we're purchasing in this case. So if the estimated rents can cover the PITIA of the mortgage, that's a DSCR ratio of 1.00 or higher. We have a ton of options for that. We even have options for a DSCR ratio under 1.00, which Jose went over last week. We did the no ratio DSCR loans, and that's where the property doesn't quite cash flow on a monthly basis. So a ton of different options. Today might be a little funky. We might have to play with this a little bit. Our pricing tool is updating, so we might have to actually input a DSCR. Usually I like to leave this blank so all the options show up, but we might have to input a value here. And the final thing we need to set is prepayment penalty. That is standard for a non-QM investment property. We always choose 3 years. That's standard. There are programs that allow 0. Those are limited and will cost more. And there are some programs that allow 5 years to save our investors some money. But not all programs allow it. So we always do the demo here with 3 years as the most standard option. So let's see what options pop up. I'll probably have to do 2 pricing scenarios now here until we get all the new values synced in here, Jose. So same thing Jose is probably doing in the other screen there. We'll do it with no DSCR ratio to make sure we show all those options. And then we'll do it with a DSCR ratio to show those options. So this is a good option here, 8% rate, 0.975 discount points and costs. So saved our investor a ton of money out of pocket there. And the final APR of 8.066. So comparable APR, that's what we love about the non-QM programs here, especially in this market. And we can use a totally different income method. Many investors, as long as the property cash flows, don't mind a rate that's a little bit higher than the conventional options. But if they do want the conventional options, it's just a higher cost there. So there's quite a few options for DSCR here, but you notice it's not as many as usual. So let me real quick, just so we can see it, because they changed everything today. We're doing some new tools today, where if we put in a high DSCR, we should see the missing options here. I think we already found the best price, but let's just make sure we exhaust all the resources here. Oh, only one option popped up at the moment using the new tool, and it's not the best rate anyway. So we'll slowly see as we do these demos where we will have to input the new DSCR value and add that to our search, but we already found the best option. So again, this was for a 30-year DSCR loan. So now, since on the live pricer, we don't really have it configured for the fancy stuff, we have Jose can set up a deep dive example for our topic today on a variation of the DSCR, which is going to be our 40-year amortization option. So 40-year fixed DSCR option. Obviously, these are business purpose, basically commercial loans. So that's why these are different than, your typical, primary home loans. These are for investment properties only. So some amazing flexibility that we get afforded with these options, especially as the rates have gone up, and obviously rents have gone up too, but probably not as quickly as rates. So this option allows us to lower our monthly payment in order to increase the DSCR ratio. Since remember, DSCR loans require no income or employment, we're simply going to use the DSCR ratio value. So as long as we can lower the payment, we can increase our ratios if we're ever running into trouble. So I'll go ahead and let you finish off the introduction, Jose, and then we'll pull up your examples.
All right. Good morning, everybody. Thank you for joining us. Daily Rates Live with the Mortgage Calculator. Here we're adding a nice little twist to our favorite DSCR program. As you know, sometimes we have to get a little creative to meet that 1.0 mark or whatever mark you may be trying to meet. And we can usually arrive at that objective by going 40-year or going 40-year interest only. I will note that in the examples that I am going to share today, the interest only feature does not add any additional cost to the 40-year. So you can go 40-year interest only, or you can just go 40-year, depending how you want to do it. Remember, interest only is an option. You always have the option to amortize, but you also have the option to just go interest only. So I am sharing with you different LTVs so you could see, you could visualize it and see what would be the best option for your borrower. Here we would have the unicorn 15% down DSCR, 85% LTV. Here, this is the 40-year amortization option. So 10.875 is the lowest cost option, and 9.375 is the lowest rate option. Now, this one here was just 40-year, but we add the same one, 40-year interest only. You will note that the rates are the same. 9.375 is costing the same, 13.175, and 10.875 should be also at $425. There's a little bit of a lender credit there that I didn't capture on the first one, but this is 40-year, 85% LTV, 40-year amortization with an interest-only feature. So sometimes, as you know, the challenge on the 85% LTV DSCR option is going to be meeting the minimum DSCR requirements. Well, with the 40-year interest-only feature, you can get that much closer. So now we have 20% down, same type loan program. So you'll see the rates get substantially better. You're looking at 9.874 with a little bit of a lender credit, and you can buy it down to 8.374. This is with interest only, but just to show you that the same rate is available, 40-year amortization without interest only. Now we have our 2 to 4 unit, and guess what? Great news. No adjustment, no loan level price adjustment to use this product at this LTV on a 2 to 4 unit property. Same rate as the 1 unit property. This is our interest only option. And now we have some cash out options here for you. On the DSCR, 2 to 4 unit property, 40-year amortization, interest only. This is your best cash out option. And this is for 1.0 DSCR, 40-year interest only. That's 2 to 4 unit. And again, to show you the comparisons on the 1 unit, same exact rates, no adjustments on that. But now, another interesting feature here is our 0.75 to 0.99 DSCR 1 unit. Great news here is that this product is 75% on a cash out also. So again, your 0.75 to 0.99 DSCR cash out is at a 75% LTV. Those of you who may have thought it was a 70, it's 75% on that one. And if you are having any issues, or if your borrower may have any issues, a little bit higher rate on that program, they can go 40-year interest only, which is the rates that we're seeing here. So 10.375 is your lowest rate option, 8.625, 10.375 lowest cost option, 8.625 lowest rate option. And we do have, last but not least, our less than 0.75 DSCR option is available, 70% LTV max, and you can do that as a 40-year amortization, interest only. You're looking at 10.375 as your lowest cost option and 8.75 as your lowest rate option. And that is for a property not cash flowing. This is our below 0.75, but you can add the 40-year amortization interest only feature to it to enjoy these great low payment options.
All right. Looks like we got at least one question here. So Deborah's asking, Jose, can we do 40-year foreign national DSCR?
I don't see why not. I didn't set that one up for any quotes today because my borrower today was coded as a national borrower. But I will run that scenario for you, and I will let you know.
Typically, Deborah, it's an add-on, right? So any investor that has it as an add-on, it'll just need to comply with the LTV, right? So to add it at X LTV, which will be the limit for a foreign national, just be a limited LTV, you can add that feature for X cost usually. So typically always applicable in the rate chart there. So I don't see any other questions at the moment. If anybody does, throw them in there quickly. Otherwise, Kyle, you can go ahead and wrap us up for the holiday.
Perfect. Thank you. Yeah, absolutely. So great programs there. And we are going to talk about some interest-only programs as well later this week. Thank you for tuning in, though. Remember, we do this show every weekday at 11 a.m. Eastern, where we go through the different live rates. Of course, we won't be doing it tomorrow for July 4th, but we will pick it back up Wednesday, July 5th. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see everybody on Wednesday, 11 a.m. Eastern, for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.